test, baby. 1, 2, 3. Let's see if this works. I'm about to go make an espresso, so I'm going to be back in 7 or 8 minutes. We'll just say back in 10 minutes. And then we'll do some live charting. Let's see. Get rid of this one. Alright. And we'll do this. Okay, back in about, I don't know, however long it takes me to make this espresso. Okay. Okay. Oh, that's good. There's just nothing like fresh espresso. You know, I pull the shot. It's a semi-automatic machine. So I pull the shot. You know, I got the beans that I want. I grind the beans fresh every single time. You know, you get that nice whole milk by the Clover brand. I don't know. I don't know if it's better or not. Seems to be pretty good. And I just do the whole thing, man. 25-second extraction, lots of crema, and do a little cappuccino. And it's, yeah, it's, I mean, Starbucks doesn't compare, right? Starbucks is just pure, absolute crap comparatively. But, you know, it's as good as any coffee shop. And I got to make it whenever I want. So here we go. So this is quick little view of my DOM or DOMs, time and sales, heads up display, crew chart. It's just one view. Right next to it I actually have my my quote board. So I'll do a little charting, starting with the E Mini. My fan's going above me here. I'm about to turn on my treadmill and walk. If I get to the NQ, I'll do it, but I'll probably or likely do that in my off time or off live stream time. The family just stepped out to visit the in-laws. Can you guys hear me okay, by the way? Let's see. Let me make sure. Yep. Okay, I checked it. So, and then maybe I'll show you guys some other things. Shortcut keys in Sierra Chart. You know, I use Elgato Stream Deck. Hey, yep. Hey, Dirk. I said, hey, yep. Okay, cool. Sound is good. Oh, so it's maybe 10 to 15 second delay right now. And I hope the stream quality is decent. I kind of messed around a little bit with that, so definitely streaming in high def. I tried, for somebody that asked, I tried 4K, and there was too many problems with buffering and packet loss and just frame drops and stuff like that. So I'm not gonna do the 4K streaming. I don't know. I'm not an expert on streaming quality and all of that or anything. So anyway, I might talk a little bit. Oh, good. This is great. I might talk a little bit about my Stream Deck situation here and kind of show you guys how to move orders around. I watched a Oh, good, Andre. I watched a video put out by Verillo Trading, and you know, if I could communicate, like if I could have a choice of how I want to communicate, I think that guy, I can't remember what his name is, but the dude at Verillo Trading, he's such a good communicator. So if you guys haven't watched his videos, you should. He puts together such great videos. So anyway, I highly recommend that channel. No affiliation whatsoever. Never talked to the guy. I just appreciate it. It's a really great YouTube channel. So, you know, always trying to share all the cool Sierra Chart stuff or trading channels that I really appreciate. That's definitely one of them. And he gave me some ideas as far as shortcut keys and stuff, and I integrated it this weekend. So I'll show you guys what I integrated from him. Took me a little bit of time. Hence why, well, I was up late last night. You know, I have a family, so sometimes when I want to get these little projects done, I have to do it while everybody's sleeping, so I'm focused. Otherwise, you know, if you add shortcut keys and you get interrupted because you're trying to do it over several days, you actually have to create a whole like spreadsheet of everything, right? Otherwise, you get kind of lost. You get halfway through some of them, and then it just becomes a real pain in the butt to sort of go through everything. I don't know if you guys have done. Yeah, referral is good. If you guys have done shortcut keys in Sierra Chart where you do use their custom shortcut keys, you know exactly what I'm talking about. So I'm going to end up having to split this all up here. You know what? How do I do this? How do I do this a little better? Hold on. Top. We'll go top. Just a second here. And we'll show you the whole screen here, the whole ciabatta. Let's go here, make sure we're zoomed out. Let's see, you guys should be able to see it all. All right. And let's get into, let's see, Stream Deck. Let's talk about the Stream Deck right now since it's cool. All right. So this is what my Stream Deck looks like right now. Let's see, we're in sim mode. Okay. So if I click on this, oh, it's gonna hide the Stream Deck. Okay, so let's do this. Let's put it down here so I don't lose track of it. And then I'll click on here and I'll click on, let's see, yeah, I'm in sim. So now we have a DOM open. Let's make sure that for that chart that trading keyboard shortcuts are enabled. I don't normally trade off of a chart, these charts up here, but just for demonstration purposes, I will show you guys here what's going on. Okay. Yeah, I might even need to add another screen. This sucks. It's a different way to do this. Okay, yeah, I'm a little dumb. We won't do it from up here. All right, let's do it from down here. DOM and charts. All right, there you go. Do it from down here. So for example, in Sierra Chart, right, I'm using Stream Deck. You have your buy and sell buttons, right? Pretty basic. But there's some of these other functions that are kind of cool, right? So if I hit my buy, all right, so first you got to click on it to make sure it's the active or focused DOM, right? So I'm hitting the buy -3, so it's like, you know, buy the bid 3 ticks down, right? But then if you want to move your stop and tick it up, right? You would basically hit this this button here, right? And you could see how it moves down over here, right? Down here, right? It moves that up. And that's nice, right? And so, you know, I'm hitting this button here. And then if it had a target, right, which this one doesn't, so right now I'm hitting my cancel all button. But let's just say we go and we change it to like, I don't know, 5 point, and like this, right? And then we move this limit up, we get filled. And we wanted to move our target, right? We just hit that move target tick up, right? Or target tick down. So you can move that, right? You can move your stop up. So my logic on this is on the buy side, the targets always get only moved up and the stops only get moved up. Can I go over here to the sell side and move them? Yes. But when I'm on the buy side, my fingers are basically moving down to target tick up, so further into profit, and I never move my stops down. I always move them up. Hence why the buttons underneath the buys are for moving them further into profit or a tighter stop, right? So it's philosophy, right? You don't want to have a button there that allows you to have bad habits like moving your stop further away and causing you to lose more money. So because if you get into a trade, right, you should be having a philosophy of this is my stop, and you know, sure, you can adjust it at the beginning for what the trade idea is, but typically, right, you should be using the maximum size width right at the beginning and then moving it closer, right? That way if something happens, God forbid, in the market where you get Black Swan, you're stopped out for the maximum size already. So you should have a lot of these buttons all pre-configured for that, right? And I do. So anyway, that's cool. But there's this other button here, which is move target. So you can see there's a mouse and then a target, right? So it kind of represents move target to wherever mouse is within DOM. So how this works is if you have a target that's active, wherever the mouse is, which, right, it's right here, right? See that? It's right here. Wherever the mouse is, anywhere on the DOM, if you press this button, it'll move to there. It could be centered over here, it'll move there, right? Here, it'll move there. Here, it'll move there. So I learned that from Varillo Trade. I go, oh, what a great idea that this guy had. And apparently, Jigsaw Trading has a thing where if you click on the price itself, it moves the order. But this is sort of the Sierra chart way to do almost the same thing. So, right, you have this here. It's way over here, way up here, right? Right up there. And if you hit that button, boom, it's moving it, right? So this is a great way to move without actually dragging this order like this, which can be tedium if you have, it could be a little tedious if you have multiple orders and you want to move them all to the same location. So let's say we get into another one, right? If you hit this, they're all going to move. See that? And then same thing for the stop, right? So we're looking at this stop button. It's an arrow. So in other words, wherever you have your mouse, it's going to move. Wherever you have your mouse on the DOM, it's going to move your stops there. So let's do that. Watch. See that? See how this, right? It's right here, right? Anywhere I move it, boom, stops are up. Stops. Now this is dangerous because you can move your stops. Hey, I want to lose a lot of money, right? Right here, right? Or even up here, stop out, boom. Right? So that's very, very cool. So that one's cool. And then what I spent, so I've always had these sort of, some of these shortcuts in here for a little while. But the ones that I spent a bunch of time on, and I didn't get this from Varillo, but it just got me thinking about, oh, I need to update my Stream Deck and blah, 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 blah. And is these buttons here. So you see this? You guys know for my charting, I use all this stuff. These are trend lines here. These are rays, right? These are my zones, right? This is Fibonacci. This is undo last drawing. All this I use a bunch of. Maybe not the fibs so much. I probably use these more than anything. Maybe I should change this to an erase button or something. But that's okay. The undo button kind of has the same effect. And so if you guys know about Sierra chart, in Sierra chart, when you are in a control bar like this, right? So this is the zone, right? Button for me, right? Extending rectangle tool. When you hit this, you also have to hit the tool configuration buttons. So you see mine are like white, green, red. So I've got this configured for every single button. But the question then becomes, well, because this is a multi-button selection, how the heck do you have a single hotkey for that? And the way you do it is you come in here and you customize it, this control bar, by going in here and you do custom. Let's see, custom. No. Tools, custom drawing tool. Okay, and oops, I'm covering my mouth as I'm talking. How rude. All right. So you then add this. Okay, let's add it to the very top. And then we'll move it up for simplicity's sake. So you add it. After you add it, you can't do this before, but after you add it, you set the custom tool right down here. Okay, right there. And then a tool configuration window comes up. And then you set what tool you want, right? So we're doing extending range. And now the configuration is now open. You see that? So if you have like we have TC1, 2, 3s, TC1 right here. Right here, TC1, TC2, TC3, TC4. So then we can select tool config 1, and whatever that is for the extending rectangle, this single button will do multiple steps. So that's how we get it. Let's cancel out of here so we don't get extra buttons. So essentially, if I'm clicking on this zone button, right, and you can see that there's a shortcut key or whatever here, right, and I just click on it one time. Oh, do I have that right? Maybe not. Let's see. Might have messed something up. Let's see. Da, 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 da. All right. There you go. Boom, right? And then I'm just clicking on the Stream Deck, right? Boom. Right? Just like that. And then, if I want to get rid of it, I'm just using this back arrow button really quick. Same thing with like this fib thing, right? This is a tool configuration for these colors. There you go, right? And it looks exactly like how it is, right? So that's really nice. Same thing with like, the ray. Look, rays, boom, right? You want a Blu-ray? Okay, Blu-ray, done, right? You want this down here? All right, just press it, and let's see. Gotta make sure we're selected here. Boom, done. Just like that, right? Real easy, and that's gonna save me a lot of time in Sierra Chart. Just it's taken me a while to get to this place where I'm like, I just gotta put the work in and make all these buttons and do them right, yada yada yada. So anyway, in Sierra Chart, that's been really cool, and it's been pretty. I think it's gonna improve things quite a bit for me with the charting today. But I'm gonna be a little slower because I'm gonna be using my Stream Deck. So maybe I'll pick up speed. Maybe it'll still even be faster than what I'm used to, or what you guys are used to. But I'll probably be constantly clicking on the control bar or something, and then going back and recognizing, oh shoot, I'm clicking on the control bar again instead of all these buttons that I created last night. So anywho, let's go back here. So things are just a little different, and I was on Linux for a while, and I went back to Windows because Linux, although it's really good for performance with Sierra Chart, let's go back here. We are gonna go left 27 weekly here. There you go. Although Linux is great for performance within Sierra Chart, there's some limitations that I have with, I've also got like this here. I'll find it right now. Like this Corsair keyboard, right? And there's here. Show you. This is the problem I have. Charts, no cool board. Okay. Right. So we have this Corsair keyboard, and I've got this where is it? Keyboard here, right? And you could see that the way my colors are, right? These here, these G buttons, they're actually S buttons. This is like arrow, white arrow, green arrow, red arrow, horizontal or extended line, white, green, red. And so I can't configure this properly in Linux very easily with IQ software or anything. And this IQ software just talks to Stream Deck seamlessly. So I can't do any of this and have these shortcut keys, down in this area here, all the G keys. And I can't really mess around with all my lighting and everything else, as well as a bunch of other things. Like OBS, I can move everything around in OBS much easier if I'm in Windows, because the OBS software, it updates and it works, and there's shortcuts, and it's just so much easier. So the Linux, although it allowed me to really customize my look within Sierra Chart, I still have a decent look in Windows with this dark theme and everything. where I'm using like a theme that actually looks like Ubuntu, which I really like. So there you go. But anyway, all right, let's get actually charting here. Bottom 49, left 27. So I'm starting out here. Let me finish the rest of my. I'm still like amping up here to actually wake up and stuff today. Man. All right, let's get this treadmill going. Get it up to speed. Pressing buttons here. Once I start walking, I'll start feeling better. I'm just a little tired. Up a little late, messing around with my trading platform. Not the healthiest thing to do. My wife chided me. Said, you know, you'd be better off creating the Excel spreadsheet and doing it over many days. That way you don't wreck yourself on a single day. I'm like, you're right. You're totally right, as usual. Noted for the future. But, you know, I'm a bit of a pit bull when it comes to getting stuff done. I want to just hammer it out. Anyway, weekly chart here with fibs. COT down here. Basic trend lines up here. This is an interesting chart. So we went into this extreme. Let's see. Asset managers are still woefully underexposed. Keep that in mind. All right, so that's big picture a little bit. That weekly bar, look at that. Look at the volume here. So this is interesting, right? Every time we have a big volume to the downside, what happens, right? You see that? Big sell volume on the weekly, boing, bounce. Now we are in a downtrend, but all right, let's just look. Every time we get big volume, cluster, whoosh. Now we were squarely in an uptrend, I get it. Big volume, whoosh. This big volume, up thrust, big volume here this last week, right? Into what was an LVN right through here, extreme LVN. So if you remember from 2 weeks ago video, the idea was that we would likely on the daily chart, because we looked at the rotations on the daily through this area, that we'd likely get a big bounce. Now we have that bounce. So now on the weekly, we're above last week's resistance here. 40, 50, well, are we there? No, we're close. We're right here at 40.14. Last week's low, 40.56, will be short-term resistance, and so will this. This will be resistance in here too. Okay, so we're going to go look at the daily before we draw resistance lines. But if you look at the volume profiles, so there's resistance here into 40.30. We already saw that. So just right away, the expectation when you get an LVN like this is that we zip up and down. We test it a few times and we fill volume in. That's the normal thing to do. So just an FYI, right? So keep that in the back of your head going forward. I'm thinking about this right now, this chart. Don't think too hard, make myself brain hurt. It's alright, I'm still getting oxygen by starting to walk here. The oxygen will start flowing and I'll start thinking a little more clearly. Or not. We've got this upper trend line. So one thing we have here is, let me get a little tool out here. Delete this. Is we have this move like this, right? And we have this. It's a complex retracement. Now we have a trend line set up here, so we have a potential rot on this weekly time frame. Don't discount that, because if we get back close to this area, you have the potential for resistance here before the trend line, and it rolls over and we're downtrend, okay? But if you get right up to this thing and we go sideways, we have the potential for really breaking out, right? Where this becomes resistance right here. So things to think about, but right now, complex retracement, right? Major two-legged pullback. You could also say that this was a little bit of a pullback and looked like a complex retracement, and it was, right? He had a trend line here, and we busted through it, found stops above, and then rolled over, okay? So this worked with the complex retracement, which is why we were buying here, right? If you guys follow me, you knew I was buying there, and I told everybody ahead of time I was buying there. And I was taking off into resistance here, and then I stopped out in profit down in here because I had a plan. But anyway, so we have this setup here. Complex retracement worked out well. Had a trend line, broke it. Now we're on even a bigger one here, right? With the Fed, the backdrop with the Fed already starting to raise rates and seasonality coming up. Markets typically bottom July, August. Typically bullish into later part of the year. You want to be thinking about how larger players are positioning here. It's an interesting environment that we're in right now. Still a strong economy. So still a sort of a fundamental bullish backdrop. Anyway, let's get rid of some of all of this. So just thinking about it, that's all. A lot of empty space here. Still expect this to fill in a bit, but coming back and challenging this trend line here, right? And finding resistance maybe in here, because remember on the weekly, this was an upthrust, and then we rejected. So if we come back up, you know, this is the open of the candle, this is the close right here. If we come back up into this area, this whole area is going to be massive resistance. And everybody is getting bullish right now, right? Helene Meisler, she writes for Smart, oh gosh, what is it, Smart Money? I can't remember what it's called. Anyway, she's been around a long time. She does a weekly poll on the S&P 500. And 62% bulls, I think 38%, or 61% bulls, 39% bears this week. Next 100 points. So it's a poll on the next 100 points for the S&P, up or down. 61% think up. So, you know, her pinned tweet, nothing like sentiment, nothing like price to change sentiment, right? So now everybody's getting bullish. So very interesting. We do have resistance up here, and we have that weekly sort of pin bar that's got trapped traders and trapped institutional traders, big money. But again, big volume here. So we did wash out a lot of hedge funds and whatnot. A lot of reports came out this last week about how hedge funds were getting destroyed, and big ones, banks, right? Credit Suisse, all these things, that they were getting killed. So where were they getting killed? Probably from when we made new lows, right? And through this area, big volume. So, and I mean, that's just historically, it's very big volume for the last, I don't know, number of weeks, all the way at least to down here, right? COVID lows would be much more extreme than this. But so it's just interesting to consider where the resistance might be on a much larger time frame. So anyway, here's our weekly. Kind of have thought about it, looked at structure a little bit. That's probably enough for now. Might come back to the weekly, but we gave it a little bit of shine, so it's enough. All right, let me get out of this tool. We're going to go back up to the top here. All right, reorienting myself here with charts. All right, let's go to the daily. Let's make it nice and big. All right. So on the daily, we have resistance above us for the sort of this channel, right? We can think of it as So right in here, this was sort of the top of the trend through here, and you see how it was provided support, provided fake down through, and then as we broke down now here in this level, we're back up to it. Intraday was resistance, so it's an interesting sort of median channel. So it's kind of like a regression channel with, this would be the median line, right? Or sort of the average right through the middle. So we're in a downtrend and we're rallying and we're kind of back into, if you think of this as sort of a big channel, we're back up into right in the sort of the dirty area, right? We had opportunities here because of BBWC on the daily, way back from here because of market structure. If you're interested in that, like, whoa, why did you know to buy there? I didn't know, but there's a good probability. Bull flag, breakout, right? Those areas become support, right? High volume, big volume ledge here, all right? So huge volume profile. LVN, stops were found, is exactly the kind of price action we were looking for to get long. So where did we get long? I always tell you I get long calls, I get long SPY, I get long QQQ. I don't get long futures and hold and hold and hold. That's just not how I roll. I day trade futures. So anyway, this was a great setup. We now looking at the daily, you can see here, this is now short-term resistance. Volume, but look at the structures. The low, right? We bounced off the 20 SMA, came back down. We came back to this, we went up, tested that low, and rejected. So here we are now. On volume, it was bought, right? So this is already interesting, right? Think about a footprint. What happens, right? Sometimes you get like big volume coming down, right? And then as we bounce into is resistance, they absorb. So is this absorption on this bounce to the upside? It's possible. It is possible. This is an extreme LVN. Lots of volume, okay? So the short coverers from this area who were wrong way back here, right, on a higher time frame, they're buying, they're covering. People are also getting long. There's a lot of capitulation in the market, but typically when you get this much momentum, you could think of this was at one point an inverted head and shoulders. Everybody got bullish. I was looking for it as well here. I got stopped out and had a loser on QQQ in this area. That happens. I was looking to buy in this, and I did. I bought in this area. I stopped out some of the position, and then I stopped out more for a loser. We were all looking for the same thing, which is this inverted head and shoulders. That failed, right? So a lot of people got wrecked in this, what is now a bigger balance area. We have not extended 100% of this balance, right? We just haven't. Look. We'll call it like this. That's balance. That's 100% down in here. Okay. So yeah, 36.40. So that's 100% of balance. We're not even quite there, right? We're in the stage of, rotating out some of these players who are wrong here, but you just want to think big picture and possibilities at this point, right? You don't even have a full thesis yet based on what's happening here. Or maybe you do, but right, we're just throwing ideas out there, and then we're going to see what sticks after we consider a bunch of different possibilities. Okay, so that's all we're doing here. So on the daily, this is now a resistance zone. Okay, so let's go do this, and we're going to call this resistance right here. And we're going to modify this text, and we're going to say daily resistance. And that's going to overlay to our low time frame charts. Okay, so when we come into this area, I'm going to be very aware from 40 whatever to 40.75. How is this thing behaving? Okay, and so that's a big picture kind of reminder of where we're at. It doesn't tell me to go short using a footprint chart intraday. It just tells me, hey, you need to look at shorter time frame structure to see if we're potentially rolling over or if the market's losing momentum, right? And on a higher time frame, maybe this is an area where people are going to really start selling this area. And while everybody's bullish on a big intraday bounce, yes, we may have momentum. If we lose that momentum, we may have one hell of a ride to the downside from that zone. That's all it does for me for intraday trading. Okay, so that's what this is for me. Okay, so we have that. Just looking here. So this orange line is RSI. This other is stochastics, right? Moving average, slow and fast. Nothing too special. Nothing special. You can use a bunch of different things. These are Bollinger Bands here, right? 2 standard deviation Bollinger Bands. That's all that is. So on the Bollinger Bands, let's look. Bollinger Bands for the simple moving average come out of box 20 SMA. I always use the 20 SMA anyway for trends, for daily. So the Bollinger Bands is nice because it gives you your 2 standard deviations. So right now, we're just riding the edge of the Bollinger Bands to the downside. Nothing crazy. No free candles outside of the 2 standard deviation bands, right? We'll probe below, then keep popping back in or whatever. And what I mean by free candle is if you get I don't know, let's say the Bollinger Bands, let me see. Let's say the Bollinger Bands tighten up. We're going to say these white lines are Bollinger Bands. And then we go into trend, and the trend gets steeper, right? Here. The trend gets steeper. I'm slow. It's all right. And we go like this, and then we get a free, let's see. We get a free candle. What I mean by free candle is a candle that opens outside the lower band and closes outside the lower band after movement. That is that is a massive oversold condition. And typically, we mean revert off of that. It is a very, very nice signal to get long. Right? And if you go back test it, you'll see it will reward you handsomely. So you would want to buy any close or what I call free candle outside the Bollinger Band. You would buy for a move back in like that. So when I'm talking about the lower edge of these Bollinger Bands on 2 standard deviation, and I'm talking about a free candle, that's what I'm referring to. So kind of cool. Anyway, let's get out of all this garbage. All right, so we got resistance there. Just taking a look. Got this lower trend line. So here's something that's interesting to note, which is 1, 2, right? So this actually touches the low, but the background, it's an opaque label for that lower trend line. So it doesn't look like it's touching, but it is. And we have here now, we have this gap. You see that? And we're bouncing on this gap. So like we're going to get lots of mixed signals looking at this analysis, and that is okay because you know what? You always want to play devil's advocate with your analysis, right? And if it's the waters are muddy, then let them be muddy, because sometimes the market's not that clear, and that's okay. I'm not saying the markets are not clear, but I am saying look at it from both perspectives. Don't just say I'm a bear and that's it, right? Let the market structure talk to you. That's sort of the way that I roll. Anyway, by the way, what is going on, everybody? Appraiser guy, Pierrick, Charles, Jonathan. How rude of me not to say hello. What's up? It's what happens when you're tired and so focused on new technology and trying to not F it up too much. Okay. What's up, media? Okay, so if you know anything about rule of three, you know that a gap before the trend line can be quite bullish, meaning you have 1, 2, and then the third one doesn't even come down. it gaps, so before you even hit the trend line, players are taking profit, right? So if this were moving on the upside, or even intraday on a pullback, right? If you get the big, let's see, right? You get the pullback. All right, let's go like this. Right? And then price does this, and then whoop, all the way to the downside. We know that's a bearish setup, so it's the opposite here. It's more of a bullish setup because we couldn't even make it back to the trend line. Okay? So it is interesting, and we have this daily BBWC, so we're considering that. It kind of makes sense. So when I had this trend line in place early this last week, and we bounced here on my green zone, and I saw this gap, I was like, yippee, let's go. Right? So the play is over for me because we now have resistance here, and we rallied to the upside on massive volume. Right? So this one, we rallied. Where did the volume occur intraday? Again, where did it occur intraday? So what did the trading session look like on Friday? Right? Pullback. It was all over the place. So, you know, where was the majority of volume transacted on Friday? That's important. Was it down here near the open? Was it near the close? So we'll go look at that when we look at TPO daily charts, right? But that's something to think about. If we get the majority of volume all up in here, and that's probably absorptive because they're absorbing it before we hit this level. So just that is something to consider. Again, I talked about it a little earlier. Sometimes you get a footprint that is shaped like a P, right? And same rules apply to daily candles, right? What's the intraday action? So we'll look at it on a TPO. But right now, a little bullish short term because of this rejection, not even going to the trend line. You're not getting full compensation if you're trying to sell near trend line, and you're also, as a bear, you're trying to break these kind of trend lines all the time. We're already in a downtrend, I get it, but for larger breakouts and panic, couldn't even get there. So it is important, definitely, right? And you would put this trend line, you would start it here as opposed to here, because here we're in a channel up and we broke trend. So this is the first point at which we're in a new trend, right? So you want to draw it from here, not from here to here, and then at which point the trend would probably end even way down here. So this is important to draw the trend line correctly here to analyze how the market has moved into this sort of short-term trend. Okay? So a little extended, big bounce. Still think this is massively resistance. This here, because of this structure in here and how we tried to break down out of balance and went all the way back up to the top and couldn't go higher, And then we had a massive sell bar. This is all the Fed stuff, right? Fed fakeouts. This whole bar from the top all the way to here is massive resistance. So we're getting close to that. So think about this like an intraday move, right? Let's say this is the intraday open. Price has kind of gone up. Let's say this is 60-minute IB is somewhere in this area. Price is now broken out, not gone quite to 100% extension. Right, if we're thinking about this as an intraday chart, right, we're going to apply the same thinking we use to our intraday trading to this daily chart, right? And then just think about the fact that these are larger players positioning, right? So, all right, this is intraday. We came, moved, didn't quite go 100%. Now we're coming back in to test what? Initial balance. So initial balance is somewhere in here. What do we know about days that go not quite 100%, but more than 50% of initial balance? They often go back, test initial balance, and then roll over. Okay, but sometimes if it's really bearish, they don't get there. So let's go back to this short-term structure. This low came back up, could not break higher. Big sell. Now longs are trapped. Then what? We break down, gets a little bouncy, and then a big breakdown bar here. We've tried 1, 2. Now we're trying a third time. So where would you expect? If you're thinking about these like 5-minute bars, where are stops? Right up here? 40.70? And then who's trapped above? All this FOMC crap where people just got roasted? Yup. They're trapped. So if you get back here, now let's think about this. If we come back 1 day, 2 day, 3 day, 4, 5 days, and we're here, so next week, what, Thursday, Friday? So think of it like timing. Don't be impatient like everybody else. Oh, Monday, we did something. Oh, I have my bias for the whole week. No. Think about all this movement and how long this stuff takes. Be patient. Wait for your setup. A lot of opportunity to get roasted here. You go short right at this area, you get roasted. You have too much bias. But you get a little higher, and if everybody gets super bullish here, what do we know? We know there's still players trapped here. We know it. This is just how markets move. Like intraday footprints, right? And then you get a rally, and we're like, oh yeah, we're safe, go long. And then you get this big explosive bar, and then people add, they hold. It comes back to about break even. I'm selling. So this is what we're thinking of. We're thinking of the intraday chart, and we're applying it to the same kind of price action to daily charts, and then creating zones. So that's what I'm doing here, right? You're like, oh, okay, now I understand. Okay, cool. All right, so we can get rid of some of this stuff because all this is going to overlay on my low time frame charts. Okay, I think we are good. Now, do I want to keep this extreme LVN in here? Yes. Is it still an extreme LVN? LVN all the way up to 41, 26, 25 based on recent price action? It is. It's now, and we now have an extreme LVN all the way up based on recent price action to here. Now, let's include the old price action. Does the LVN fill in? All right, let's go here. Yes, it does. Well, I already knew it was going to fill in from here because what? We've had price come back through here. We've had price come back in through here. But when you're talking about recent price action, you can think of this recent. Now, this volume profile prints or shows volume that is based on the visible chart. Not everything that's loaded into the chart to the left, but anything that's visible. So it's useful for seeing what volume recently transacted from here to here. it's still low. So it's like single prints through here on the daily candles. You see how using your tools and understanding why you're using them that way actually helps you to understand the way the market moved through here on volume? All right, so if we zip all the way back up, then what's BBWC? Right here on the daily. Okay, so this is short-term resistance, but now let's think about it a little bit more detailed. Instead of just saying this little low here became resistance here, right? Okay, we already had the point where the market came down, bounced before lows, went all the way big sell, and then tested it to the tick almost, right? Within a few points, and rejected, and came down, right? And went lower, and now we're bouncing. So we've had 2 rejections on the dailies back to back. So maybe what? We already flushed out the players where support becomes resistance. So now what's above here? Stops? Yeah, I think so. Why? Because you got to think about who got rotated out already. We already had the wicks. Precise levels here. Hey, using my Elgato Stream Deck here to save some time. So, look, that low has already become resistance. So now the stops are above into what? BBWC. So does that change how I put daily resistance? Yes, it does, but I'm thinking about it as I go through. So anyway, let's use our zone button here. So now, stops above, resistance here. All right, and it's going to project from the zone or level that the structure provides resistance from. So when I go back and look at this on a low time frame chart, I can right click, look at the properties and go, okay, where does this project from, this resistance? Yeah, I'm going to have the daily reference on my chart in the notes, but I want to know what day so that I can go back and analyze in case I have a bad memory. Okay, so that's what we're going to do. Now we're changing it here. We're going to say above this is stops right here, and resistance is here. So we're going to say, based on everything I just explained, so I would be normally just zipping through this in 5 minutes without explaining every single step to you guys. So this takes me a lot longer. So all right, BBWC, base breakout with consolidation. Base, there's a breakout, the base had consolidation. We know from Fed, everybody got chopped through here. We already rotated this. So BBWC, what chart are we using? Daily. What day is it? May, probably 5/5. We'll adjust that. Okay, so now we know. BBWC 5/5 right here. So what is it? 5/9 maybe? From 5/9 is where it's resistive. Okay. So let's right click, go back into modify text. 5/9. Gusa, I do use Wyckoff intraday. But I can get pretty, so there's the potential for Wyckoff even here, right? If we come back into this zone, but you have to break above these highs. For now, we're looking at the zones of where people are trapped based on psychology and where we might get some reversals in the market. And so this is going to be helping us to have biases intraday where everybody's bullish, where we start thinking, looks like absorption. If we get a reversal, how big of a reversal might we get intraday? That kind of thing, right? And it's going to keep us from making really stupid decisions intraday where everybody else might be like, MGI's bullish. Everybody's bullish. Let's just go. And there's that's important too. You know, if we're going straight up and we're on a trend day, are you going to short it? If it's a trend day, no, but maybe the next day, right? Where the next morning, where we make an up thrust and then we fail, then you go with trend for the next day, right? Where the next daily candle pulls back and we rip down 70 points. And you're like, golly, but we had a trend day yesterday, right? And you're like, maybe you're not caught off guard because you've done this analysis. This is where it helps. So yeah, is it a little bit more complicated than just going intraday MGI, right? I follow price. Sure it is, right? Little game theory involved, rotating of bigger players. But it's this kind of thinking that you can also apply to your footprint, to your low time frame charts, and it'll help you tremendously to what? Follow the story of trap traders. So that's what I'm trying to share here. But yeah, I do use Wyckoff a lot. Oh man, I use Wyckoff a lot. And there's the spring pattern for Wyckoff. It doesn't set up all the time, but it sets up enough. I used to really like to use Renko. So the Renko bricks, like 4 tick, 6 tick Renko, because it really shows trend. And then you can put some lines on that, and it'll really show, and some volume, and it'll really show you some of the spring patterns intraday. But anyway, topic for another time. Look at how easily I get distracted. All right, so here we go. So we have that. This is obviously big zone, and you know what's interesting is this is still part of the low volume recent price action below these lows, right? So whenever you get a move off of balance and right at the beginning of the move, it's almost like zero prints on a daily chart, right? Those zero prints, oftentimes they come, they fill them back in, they absorb it on volume, and they spit it back down. But this could be a vicious reversal move. So something to consider, something to keep in mind. All right, is this enough on the daily? Have we analyzed the crap out of it? Sure, I think so, right? So now on the daily, if we come down and we break this, so we have this gap, we've bounced, and we break this to the downside, first off, you want to be looking, if you're going to get short, if we're coming back down to this lows, and we say we break the bottom down here, right? Because right now we're having this little reversal pattern. If you're a candlestick trader, right? You know, this is a reversal pattern right here. So if we come back to these lows, you want to be targeting trend line or below trend line for a profit target. And you want to recognize that the market likes to fake out below trend lines. So you want to target the trend line or below it, and you want to be mindful of a reversal down through this red trend line down here, right? So bump, bump. So that's something also to consider. I know we're focusing a lot on what's above us, and I think that's prudent. Why? Because, you know, people are nothing like price to change sentiment, right? Everyone's getting bullish after the fact, right? And what do? We try to anticipate the moves before the herd moves, right? Move before the herd does. Get in position, anticipate, so that you get best entries with tight stops. You're like, that's opposite of how I'm taught. That's fine. There's different methods. There's different ways to skin a cat, skin the market. Oh, that's such a crude analogy, but I like cats. But you know, that's fine. My style of trading is that I like to get in where people are getting out, or the herd is getting out, and I'm wrong sometimes, but I usually have fairly tight stops and better risk reward because of that. And you guys see how I trade with the footprint, right? I'm getting in where I think trap traders are located. So that's all I'm trying to do. Gives me the best probability for setups, right? This is not a lot of people think like this. The majority don't. Majority just sort of follow price. kind of like, price goes up. Well, then I'm going to start buying. And then they're latent trend, and you know, a lot of times they get stopped out because price reverses because, you know, big money has to take profit when the majority are doing the opposite of what they did. Blah blah blah. You know, this is nothing new. So anyway, daily done for now. So now remember, on the daily, this is all getting. Oh, family's back. I gotta close the office doors here, so as to avoid the sounds of excited children and babies. All right, that was a quick trip. Oh no, it wasn't that quick. I'm just having fun trading over or charting here. Okay, so here's the daily. So now you see that what we did on the daily is overlaying now to the 30-minute chart, BBWC daily. Now, this is going to be interesting because this 30-minute chart now is going to show us more micro structure, right? We're going to see structure. Hey, buddy. Oh, thank you. We're going to see little structures that on this 30-minute chart that are going to tell us even a little bit more about who may be trapped where. So let's do this. Let's go down. Let's widen it out so I don't get people complaining about, I can't see the chart. I get it. I got a 49-inch monitor up here. It gets small on the screen. I'm going to stop this. I'm going to close my office doors. I'll be right back. Give me 20 seconds. My kid sees me closing the office doors right as he's getting home, and he feels like I'm rejecting him. He's like, no, Daddy, no. He's like, Daddy, shut the door on my face. He wasn't even on his face. He's halfway across the room. He just feels like it's a rejection. I get it. It's not the way to greet your family. Here, I'm going to close the office doors. I said hi to all of them. It's all good, but you know. Nothing like having kids in a family while you're trading where they have access to you sometimes. You got to balance that. It's a little tough. If you have kids, you know what I'm talking about. Okay, let's go look at this daily. So this is that structure. Notice we have a gap here on this 30-minute. Doesn't show up on the daily chart. The way I've got my charts, the way that they point is, let's go to drawings, chart drawings. You see this? These point, so copy chart drawings from chart numbers. These charts point from higher time frame. So these are all higher time frame charts on this 30-minute chart. And then my lower time frame charts point to this number 19 chart, the 30-minute chart. Right? So higher point to lower, and they just keep pointing to the lower ones. So trying to, again, help you guys with organization. You get this stuff in play, and all the analysis you do on your higher time frame then gets overlaid down to the lower stuff, and you have to do very little work for the rest of the week because you have all these big zones overlaying. It's a beautiful thing. So anyway, this 30-minute is RTH only. What does that mean? Regular trading hours only. 6 or 9:30 Eastern to 4 p.m. Eastern, right? So the highest volume of the day. Why do I have it like that? I want to see gaps. So these yellow lines are gaps, right? So here's the open, here's a gap, right? Longs had no chance here. They had absolutely no chance here as they sold the market after FOMC. Consolidated, pushed up, sold it. And then even another gap on Monday from the weekend. Notice now where this opens is now the lower part or the upper part of the gap. So here we are, median daily downtrend line. We know what that is. We're now, in terms of trend, all right, let's do this. In terms of trend, we're in something like this, right? We're in this channel. So here the trend was a little steep. We're now coming back in. We're now breaking through short term. Doesn't it make sense? Okay, we're getting a breakout short term from this trend. And again, this is 30-minute, right? So breakouts on 30-minute, not necessarily on daily, right? All these different channels and trend lines, but the lower time frame on this 30-minute, it's looking like, okay, we may come back. All right, so we have a gap here, right? From here to here. You notice it's not in the chart. Why? Because it's the first weekend since last week. There is a gap. So what am I going to do? And now notice we had what? Move up, rejection. Move up, higher, lower high, rejection. Back to that area, rejection, right? Which is why I shorted the crap out of this intraday, and I showed you guys I made all kinds of money doing it. Because I'm looking at this analysis. This is, for a 30-minute chart, BBWC. Base, breakout with base, breakout, and with consolidation before it. Whew. So when you come back in, you get the opportunity here. Boom, big pullback. Not even quite the RTH highs. Bigger pullback, right? So is it useful to have these RTH or high volume 30-minute candles on your up on screen all the time? Answer is yes. That's why I got a 40. That's why I have a 49-inch monitor. It's why I have footprints, 1,000 volume bars, 5-minute candles, 30-minute, and daily. And I see where all the charting, all the drawings are emanating from, but I also write good notes. So I'm constantly thinking bigger picture. Okay, what does the small picture look like? And because I'm constantly comparing, when the footprint sets up a certain way around the 30-minute, I catalog it mentally. Oh, that's what that looks like from that 30-minute. That's how they, that's how they absorb. If you're looking at a point figure and it goes so slow through there, and everybody else is like, we've seen on Elliott Wave, 135 up to the highs, which is a 135 bullish impulses for Elliott Wave. Everybody else is thinking trend day, and I'm going, yeah, I'm going to short this. Why? Because I'm looking at the 30-minute. And I'm looking also at short-term parabolic trend exhaustion, even though it's a trend day. Now, if we had a trend day break above into this level, which is weekly value area high, and we come up, we pull back, and then we go, you think I'm going to be shorting this right here? Probably not, because now all the shorts, it's their turn. It's their turn to feel some pain. So am I going to be shorting here after we test it and keep going and continue? Heck no, I'm not going to be shorting. Now, is there resistance up here? Yeah, absolutely. And if you get a trend day that goes all the way up to this level and we're at the close, do I short right at the close? Only if it's a parabolic move with stops. I'll take a shot at it for the overnight Globex session because they'll probably sell it and they'll find all those stops. But there's always a possibility if the market's super bullish, they're going to use that bullishness to go find stops above even that level. So you got to play with defined risk. There's no guarantee. But it's a probability game and it's a risk-reward game. That's all it is. And that's why if you stop out, don't move your stops up here. All right, you have a decent-sized position here, take your stop out. You can always get back in because the risk-reward on a rejection, if it's a fail breakout, is maybe a stop here with a take profit down here. So it's good risk-reward. That's why you got to be like water, right? Constantly change. Constantly allow yourself to stop out and re-enter when it's good risk-reward. And recognize. Now, if you do it 6 or 7 times, well, that sucks. But if you have edge, you got to do it. You got to keep playing your edge. Because you can't just look backwards and go, well, I just lost 5 times. Why? Go back to my last video, look at the Monte Carlo section towards the end of the video. If you have edge and you have a 60% win rate and you're Risk reward is what? I don't know. I'm just going off of memory. 1.43 R's. I think it was 1.43. That's what my brain is telling me it was. 60%, 1.43 R's. How many times over 100 trades are you going to have a string of 5 or more losers? Once. At least once. So if you have a string of 6 losers up here, and this is part of your overall strategy, you got to keep playing. You don't just say, well, I stopped out. I can't play anymore. No. Every single trade's probability of success is reset on that trade. Right? The probability of success is not dependent on your prior losing trades. Let that sink in for a second. Right? When you roll the dice, each time you roll the dice, your probability of rolling whatever is reset. Like, huh? Think about it. I took statistics. I did well in statistics. It will change your life if you can think about trading that way rather than getting emotional after losses. So anyway, back to this 30-minute chart. So here we are breaking out. We now have a gap. So let's go put the gap in before I get super distracted. All right, I have a zone button I can use now. Here's the open up here. Here's the gap. So open, close. So there's a gap from up here. So the gap fills at this yellow line. I know a lot of people will take this and go gap fill right down here. That's valid too, because the market sometimes does find this, even this low, this pullback low, might be resistance. But technically, the way I do it is I go to the close. That's the gap, right? And why do I do that? Because this close is going to have volume. From here all the way to the close may not have much volume intraday, but right at the close, tons of volume. So what do we know about settlements? They occur at the close, last 30 seconds. So therefore, I'm not going to be looking to short here. It might happen, but the higher probability is to completely gap fill and maybe come within a few points, then reject. So that's why I do it that way. Okay? Again, I'm trying to find the best probability, not necessarily what the market does sometimes. I'd rather take a short here if we gap fill intraday or something, and then, big volume node, footprint shows reversal, shows absorption, aggressive sell, then I'll take the short, than stepping in front way down here. And where the hell do I put my stop, right? It might be an explosive stop move through these lows. Yeah, sure, we may get a little rejection here. It's extreme LVN. Essentially, from week to week, there's a gap. That's a weekly gap, right? But anyway, that's how I do it, and why I do it this way. So I've had people argue with me about this, believe it or not. Oh, the gap is this is the gap. Like, people have different ways of doing it. I do it my way for reasons I'm stating here. So, open to ideas. Okay, so the gap occurs on 5-9. So we're going to call this 5-9. Oops, gap. That's it. Done. Bing. 5-9 gap. All right, overlap with the extreme LVN now. So interesting. Of course now it's making more sense. We see there's a gap. Of course it's still recent extreme LVN. You go to the lower time frames, all this starts to make even more sense. Okay, so here we have essentially this is resistance up and through here until it's not. We've made a trend, higher low. We're now breaking up. Everybody's gotten bullish. We expect some extension, movement up. Yeah, probably. Now, let's go do measured move stuff. Because all of this that I'm talking about right now, I typically wouldn't put on a chart, but I'm going to talk it through so that you guys are just aware that I'm thinking about it. And these are things that I'm going to also hold in my mind as the market moves next week potentially up through these zones, okay? So here's what we're doing. Let's go measured move. Let's do this. Swing low. Oops. Swing low, measured move. What is this? Plus 172. Swing low, measured move, approximately right into BBWC daily. So if you had an exact measured move here, right, it would take us right to the top of BBWC on the daily. Isn't that interesting? And right, so what would happen is, so let's get it more exact. If it was exactly the measured move, 172, right? A little bit more. All right. So if we had a measured move, everyone's bullish this week, and we came back all through. Now it's probably not going to go up in a straight line. It's going to pull back. It's going to fill gaps. It's going to pull back. But if we have over the next few days a measured move, where does that measured move off of this pullback? So this is what, a 38.2% retracement pullback and spring here. What do you guys know about fibs in 38.2 generally? If we hold the 38.2 and we bounce, very bullish market, right? It's just a rule of thumb. It's not a hard, fast rule like every time it goes to the 38.2 and pulls back, I buy because that's bullish. No, it's a gauge of the strength of the market. That's the only thing you use it for, right? So it allows us to be a little more systematic about, hey, we held about the 38.2, pretty bullish, couldn't even get to the 50% of the leg, pretty bullish, okay? So it just shows strength. So let's see. Let's put a fib on this bad boy. Bump. Is it the 38.2? That's the question. Ba, ba, ba. Oh, man. Fail, 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 fail. Yeah, it's about 38.2. See that? Foop. So it's the idea. It's that green here, 38.2. So it's about 35% or 1/3. Think of it as 1/3. It's about 33%, 34%. So it's 1/3 of the whole move, right? Markets tend to like to move, and the markets like to, typically if they're bullish and in a sustaining uptrend, they go about halfway and they bounce, right? People take profit. If you're short up here, you can take profit about halfway down the move. That's why 50% works. It's not some magical thing. It's just like the 50 rule. It's been around forever. You do it with everything in life, right? You get halfway there, like, to de-risk a little bit, right? Get halfway through your marathon run. Oh, okay, where am I at? Check my time. Eat a little food, load up on the carbs, whatever the drinks, right? It's a time where you kind of check in and just sort of like, and then you know how it is. Watch every tick. You trade like a beep, right? And so same exact thing with trading. You get about halfway. The brain is good at calculating the halfway mark. People start thinking about their trade. They go, I'm going to take off. I got good position. I'm going to take off, right? Everybody thinks the same way. We're all human beings. You take off. So you get 1/3 of the way pullback. People are really more interested in buying, right? It's a little more bullish than the 50. That's all it is. So don't overthink it. All right. Yeah, using my Elgato Stream Deck buttons here to back out of this. Okay. So we've put that gap in. This is about all we need on the 30. Now, the way I would form resistance for this channel would not be to do it the way I've done it with this tool. It'd be to go like this. All right, here. Sorry. Here. Here. And then here. Like, what? What is that magic? All right. So we have a clear channel trend line low. So if you take this point, and then define the upper channel because it's got a swing high, what you'll get on the extension from that level is the distance between here and here, or the width between the here and here is the same. So now it's projecting this way. So now notice here we're getting a pullback outside the channel. So we're trend up short term on this 30-minute. And that's how you find channel resistance when everybody else feels like they don't have a second point on the opposite side of the channel. Not a lot of traders do this correctly. So you're learning something that could be very, very useful. Okay, just reading the comments, making sure I didn't miss something. Okay, so we have that. And then we're going to keep this on the chart. Now, because it's extending, if you try to put a note on this thing, it's not going to show up on your lower time frame charts. Just see, it even grays it out. Modify text just doesn't allow it because it's fully extending, right? So it doesn't quite know where to put the label. All right, so it's just a whole thing in Sierra chart. I guess it makes sense, but I would like to have labels. So I'll just know that this is a 30-minute, and I'm going to have this up on a chart. So anyway. Done. Done with the 30. See how long this takes, guys, when you're talking about it the whole time? That's why I don't do this every weekend. Everyone's like, can you do this every weekend? I'm like, no. I'll do it until I've exhausted. I think that I've exhausted all the explanations and you guys get enough out of it. This is a different kind of market, so I feel like this is going to be useful to a lot of you guys to hear how I'm interpreting this back into this market. But if I feel like I'm just saying a lot of the same thing every weekend, no. This takes way too much time for me to do this. Okay, so, you know, you guys don't pay me enough. Am I paid through YouTube? A tiny, tiny bit of money. But it's like, again, it's a drop in the bucket compared to trading monies. So anyway, I know that some of you will find this useful, so I'm going to do it until I feel like I'm repeating myself, at which point I won't do it. That's why some weeks I don't do it. And because, you know, family obligations too. So I'm a full-time trader. I say this all the time. Full-time trader, not a full-time YouTuber. Big difference. That's why I'm never on when the markets are moving fast in the morning, because I need to focus on paying the bills. So just FYI. Rainer, cool, man. Appreciate it, Simsum. And Giaco Music, appreciate that. Appreciate the encouragement. It does help me. If I didn't feel encouraged, I wouldn't do this channel. I just wouldn't do it. It has to be fun and enjoyable, blah, blah, blah. Because I make money trading. YouTube is not, it's not, for me, it's nothing. And I don't plan to make anything big or to do any referrals or anything like that. So, and brokers that may be watching this, they know I've already said no. So you guys know I'm not interested in all of that. That's why I took my email off the YouTube. I'm like, there's no business inquiries for me. So, and it's partially why I'm like, hey, go check out this guy's channel. Go check out that guy's channel. It's not, you know, not that I'm trying to network. It's just I have no interest in seeing someone else get promoted through my channel, or because I'm just being honest about what I think about people. So you have a cool YouTube channel, then and I think it's cool, I'm gonna say that. Okay, so here on the 5-minute chart, this right up here is 5-minute. You see it's got all these little time frames: USA, USA 2, Asia, Japan Open, European Open, yellow line, right? See volume spike, price moves around the European Open. Obviously RTH, it moves like crazy as well. This, I typically come back and look at it at the very end for microstructure. But you see this at the close, BBWC, right? You're like, you see it everywhere. Yeah, well, prices oscillate all day, don't they? Look, guys are going to be getting so many more opportunities now. Look, break. This is a consolidation zone. We broke down from it. We tested, went way down, made a huge move back into. Let's put the zone. Oh boy, I love this. Using this stream deck. Look, the breakdown bar, right into the breakdown bar is resistance. See that? You see how that works? I think I talked about this on the stream on Friday, but if I didn't, I apologize. I'm pretty sure I did though, and I got rid of some of these lines intraday. But anyway, BBWC. Again, big move down. Once we come all the way back up, it's resistance. On what? First touch of area. Let me make that super clear. You don't go, well, pull back a little and BBWC. No. Base breakout. This base has consolidation. We test it. We went for a ride to the downside. And when we come back, this is also BBWC. What? Big move, breakout, breakout bar, BB, base, has a breakout with consolidation, WC. So right here to here, without even looking right, I know it's BBWC. What happened? Look, came up to it. If you got short, now, was it probably a quick foray and then rejection? Sure. Now how much are you going to be able to profit? If your stop is up here at 40.19 above this area, what's 1R if you got the very bottom of the red zone? 4,013.25, right? So if you had a 1R stop, 4,013, where'd it go? 4,007. You barely got out for 1R. So think about that. It doesn't always work perfectly, but does it have rejection? Sure. Did it have same thing here? It's smaller. The base, the consolidation is less bars, less time, less consolidation. And look at the volume, lower consolidation. Even so, when there was a big breakout bar and we ripped straight up, did you get the opportunity at 4,000 to short the BBWC? Did you? That's my question. Yes, you did. And you went 4,000. Let's say you went 4,000, right? And you put your stop at 1R, right? Above the highs. So you get 4,000. Stop above what? 4,009. So 9.5 point stop. Could you have gotten 1R? All the way down to here. Yeah. You can get 1.5R. But if you put a 1R trade on this, again, what's your probability of success? Is it more than 50%? Is it 70% on this kind of play? Probably that and higher. So if you even know what to look for here, big move. If you see the zero prints, you might even be able to put your stop right above this wick. If on your footprint you had zero prints and they immediately sold it down, you could put a tight stop, maybe 2-point stop, if you know what to look for on the footprint, and get 3 points. What is that? 1.3 Rs. Well, 1.33333, but roughly 1.3 Rs. At what? 60%? Okay, over 100 trades. What does that return on a $25,000 account? Median. Using Monte Carlo simulation, what does it return? 15,000 over 100 trades, right? 200 simulations, right down the middle. Now you could be the unlucky SOB that only makes 8,000. Market might change dynamic, right? There's variables. That's real trading. But if you can do this and set it up, you can make money. That's why I do it on YouTube. I do it live. I demonstrate it live all the time. I haven't had a losing day in front of you guys yet, but it's coming. Don't worry. Humble pie is coming for all of us. Humble pie. Humble pie leaves no man with the dry face. Okay, or woman. Hatsified Google got it wrong. Yet nobody else talks about it. BBWC is my own terminology, and I've said this a bunch of times on live stream. There's probably another term for this type of trade, but I don't read a lot of social media for my trading. I come up with my own stuff and have over many years. And then everything I know that is sort of codified, I get from books, right? So if this has never been talked about in any of the books, I probably don't know the right name for it. So I'm just letting you guys know. BBWC might be something for some trader out there that maybe came up with it 10 years ago. And if I'm not giving them credit, well, I'm sorry, but you know, all these patterns are defined by somebody somewhere before my time, and guess what? I'm not looking for the origin of the price pattern when I don't even know the name. I just call it something and go with it. So if someone wants to point me to the source of the whole setup and say, yeah, give this guy credit, and you know what? It's super popular. Great. I'll start calling it that probably. But anyway, so you're not going to find anything on BBWC. It was actually a name that I made because it sounded like somebody else's initials in the old non-existent now Discord chat. And I said, oh, it sounds like the rally base drop RBD. Yeah, maybe. It sounded like their initials. We were cracking jokes, and I was like, hey, it has to not sound like it was DDC. So I was going to say BBC, base breakout consolidation. And I was like, no, it sounds too much like D, like Dave, Charlie. So I was like, if we put a W in there, it'll sound different. And maybe if that person's on the mic, they won't think we're talking to them. Or like, because what if we're like DDC? Like that was their initials. And then I'm like, BBC. They're going to be like, what? Huh? What, Mike? You talking to me? Right. That's the only reason I called it BBWC. That's it. Otherwise, it would have been BBC. Shorter is better. Or even BC. Right? Base consolidation. Or BCB. That probably would have been better. But yeah, we couldn't think about it or I didn't think about it in real time fast enough. So there you go. It's BBWC. Okay. All right. So let's get this chart off the screen. Let's go look at, oh boy, let's go look at TPO charts. Bing. We can make this a little easier on the eyes. This is why I'm back on Windows, because this is going to happen fast. Watch. Bing, bing. Bing, bing, bing. All right. In Linux, I would have to go define these edges and actually do the editing by hand by the pixels, right? You enter in the amount of pixels that you want it to edit on right crop or left crop. In Windows, there's just a shortcut key. There is none in Linux. These are the kind of things that drive me mad. So I wanted to love it. I wanted to love it so bad. Okay, here we are. Let's go take a gander. Just looking. Look at all that volume built up here. So we said when we were looking at the daily chart, I can hit control, can't I? Yeah. There we go. If you hit control, and then drag this up, it'll scale. And then if you let go of control and drag it, it'll move it, by the way. So we were wondering, where's the volume on this day? It's all at the top. Does not bode well for bulls. Like, why? Because if you're averaged in here and then you close up here on hardly any volume, the majority of folks that bought here, are they comfortable? Yes, they are. So if they then buy on Monday and Sunday night or whatever as it pulls back, they can continue buying and supporting the market, especially if they're not looking to take profit. But in this case, you could say, well, there's no interest. Well, this is just a matter of rotating volume. So I would prefer to see us have a B shape instead of more of a P shape. A B shape, then closing on highs, liquidation of longs, smart players average down, we're up here, and then go take stops. But this does not bode well for volume all being up here. So going back to this daily chart where we're asking the question, where's the volume? The volume occurred. Oh, you guys can't see the daily chart anymore. Let's see. Top. There you go. Right up here, the volume all occurred. It's a P-shaped day. So we answered that question by looking at the daily TPO, which is exactly what I said I was going to do, right? And then now, if you look at this, so this is RTH only, right? You see this chart says RTH, 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 RTH. We could turn this off using this little moon thing, right? Sun and a moon. The moon's bigger. Why? Because Globex spans more time, so it's in the front, thus bigger. So the perspective, as I'm waiting for this thing to load, just talk about something stupid. The perspective is that the moon takes up more time, but the sun is brighter. So RTH is the color it is for a reason. I load a lot of data into my TPOs, by the way. Many days, because I like to see naked volume points of control from way back in the past. So you see ETH now is marked up, right? And then it gets this background, right? And that's ETH up here. See how this matches? Look, see how this ETH here, that color matches the color of the moon up here, and the RTH matches the color of the sun. What a cheese ball, Mike. Yeah, I am a cheese ball. That's all right. Bite me. Okay, so we have a gap. Oh, I gotta load it now. It's all right. We have a gap. It's gonna load faster because it's RTH only. Give me wasting all of your time. That's okay. That's okay. Generation entitled. I can waste your time. I'm helping you. Not all of you are like that, but God, you guys. All right, I'm not gonna bitch essentially about people who bitch to me that I didn't do something perfectly for them when I'm giving this all to people for out of the kindness of my heart. Okay, so here you go. We have a let's see. Let's look. Yeah, Dirk, it is cool, man. You're probably gonna use it and improve it. Dirk is a chart magician, by the way, you guys. So here's the close, RTH close. Look at that. We've got a gap underneath this. Did we miss that? Yeah, I missed it. Now, going back to the daily discussion about daily highs acting like support. On gap and goes, hell yes, they act like support. Why do I say that? Because of this. You see that? Right here? That's the highs acted like support for the gap, pull back and go. So is this a great way, or what, where you have this huge body down here and you gap the market up and you don't sell into the gap, and you want to distribute out of a position, is this a great way to distribute out of a position in a downtrend? Ask yourself. Now, how much volume transacted on this day? All right, we're getting smart here. Come on. One for RTH, 1.45 mil, 1.8 mil down here. See that? 1.8 mil down in here, 1.45 mil RTH. Was a lot of this in the overnight? Was there a volume? Yes, there was. Short covering through this whole area for this gap. Yes, absolutely. That's where the volume comes in. On the daily bar, where it's really high volume, because the daily bar starts at 8 p.m. Eastern, or starts after the hour close, after Thursday night. Okay, so then it was just, you guys saw the rally, right? Produced a big gap. So if you're wanting to really get out advantageously from your buys, how would you do it? No volume. I'm not selling. I don't care. I'm averaged in from here. Maybe let's say big player, right? I'm averaged in from somewhere in here. I ain't selling this. In fact, I'm holding inventory. I ain't selling. As shorts they're going to cover. As long as we hold the swing highs like we did, they're going to cover. It's gap and go type theory. They're going to cover all day long. Now I can get out near highs, near the close, right? So that's what happened. So really interesting. We do have a gap here that is left unfilled because the close is here on this orange line. Here's the open. So let's mark it up. It's a gap. I can't believe I missed that on my 30. Yeah, it's right up there on the 30-minute. I missed it. Huh. Nublet. Okay, so let's go here. Boom. Boom. Now, we filled some of the gaps, so do I care about marking it to here? No. I care about marking it to here. What day was that? 5/12, 5/13. There you go. Modify text. 5/13 gap. Anyway, we get rid of that. Race drawing. Oh, shoot. All right, I'll do it again. Remember, I got buttons here. I can do this fast. Okay. And here. All right. There you go. Put it in real quick. 5/13. Friday the 13th. Gap. It was a bad Friday the 13th for short sellers off of the swing high breakdown. Anyway. So used to not using the control button. Does the opposite. The control toggles between whatever you have it set. So if you have it set to scale move and you grab it, it's going to move it, and then control will toggle interactive scale range on when you're left clicking and holding down. So that's what that does. Anyway, I'm going to look here. There's that poor low, which became resistance. So on this TPO, looking the 50%, we couldn't quite get there off initial balance, right? Pullback here, stops above. So we're going to say, so you can just watch. Stops above. And I'll know how to play that intraday. I enter on other stops sometimes. and exit into the FOMO, as Dutch Daniel says on his Twitter account. See, now I'm familiar because I looked at his Twitter Friday because I had a memory from him from about a year ago. His Twitter account stuck with me. You know what it was? Somebody was pointing out to me that, hey, he joined the Discord. Here's who he is, blah, 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 blah. And I was like, oh, okay, cool, whatever. So I went and looked at they linked me his profile. It's probably a year ago in Discord. And I was like, yeah, I don't care, whatever. They're like, oh, he's a vendor. I'm like, so? Okay, well, it's fine. Of course, people are going to join various trading groups. It's, yeah, okay, whatever. So that's why it stops above. Oh. People are so paranoid about... I guess there's a reason. But whatever, I'm not. Not at all. Let's see. So stops above. This is naked. TPOC and VPOC up here. Is there volume here as well, though? That's the question. Notice here's initial balance. So first 60 minutes of trade, you have this 50% extension area overlapping from initial balance. There's typically a lot of volume, that high concentration of volume that occurs at the open. We instead broke down. So if we move on stops, what might be a big area of resistance is that 50%. Like, what? What is this craziness? 50%. Well, it happens to line up with this volume node here. So there were players positioned here that wanted probably to take profit off of initial balance in here. Like, they're still holding. Never, ever underestimate the power of the idiotic trader to hold through massive pain and drawdown and get out at break even. This is the psychology of the turd trader, and it's rampant. And if you don't believe me, good, because I get out or enter positions on their idiocy, and I do it all the time. Okay, so anyway, end rant, little rant. Let's go here, and what day is that? 5/6. So high volume right here. Again, this is just going to go get overlaid onto my footprint chart for the E-mini. Anyway, 4, 5, 6 HVN, high volume node. That's all it is. All right. Where's 100%? Oh, another HVN. Cool. Five, 6 HVN. Now you guys might think that these HNV that these volume nodes aren't going to matter, but remember about BBWC, and remember about the breakdown from that area. They're all going to matter, and these are all resistance. So now what we're doing is we're fine-tuning our resistance levels based on volume, but also keeping in mind, hey, we got BBWC up there too. Okay? So, and now we have another level even up here. So if we start to, so here's a scenario, right? You're watching your footprint, and on the footprint you see an iceberg passive seller, and they fill them for 1,500, 2,000 lots, and he's really near this level or on it. And then you got another passive seller up here, right into the zone at 4105. Another 2,000 lots, and they fill them. And then it goes right up to this, to the top of initial balance, which is naked volume point of control and naked time point of control up here. And there's a volume node up there, obviously, because that's why it's naked volume point of control. And there's another iceberg. Meanwhile, we're in a trend day. So you know, I'm not the idiot that steps in front on the trend day when there's momentum. What should you be thinking, though? You should be thinking that, look at all these iceberg sellers, And I remember what Mike said in that video about BBWC. Maybe you don't position your account bullish up here. Maybe, just maybe, the next day after the FOMO has subsided, you're thinking, oh, I remember those iceberg sellers. And that big money is not going to rotate out in the next 5 minutes. It's going to take them a day or two. And they're going to absorb this market, and maybe they sell it the next day or two. So you should be thinking the next day or two. See how you have to use a higher time frame to be a little bit patient to make a good play, right? You don't just, oh, I see icebergs. Oh, I'm gonna short today. I'm gonna hold over the weekend. Then you have a bad weekend because, you know, news comes out and Powell makes a few comments and Bullard comes out and makes a few, and then Brainerd comes out and makes a few, and you're like sweating all weekend. You're like, damn it. And then Sunday night comes out and they gap it up and you're like, I'm out. Weekends, right? And you had a bad weekend because you thought about it all weekend. No, wait till Monday morning. Wait for that weakness. Take a shot, right? And meanwhile, on your low time frame charts, you have these delta imbalances that are being projected on your low time frame charts, on your 1,000 volume charts or whatever, and you see these lines, you know that they're delta imbalances. You're like, yeah, if that level breaks, that was from Friday. That was like 2,000 lots. I remember that. Maybe you go on your low time frame chart and you mark it up. Hey, right, 2,000 passively absorbed on the ask. What do you think happens below that, right? So there's every transaction. There's buyers, there's sellers. But some of the bigger players will position into the FOMO, and then those will become what? They'll become weak points in the market on the way down. Maybe they bounce, but then they roll over, and when they roll through after the bounce, whoosh, vacuum. And the markets go straight down. Everyone's like, what the hell? I should have sold on Friday when it was FOMOing. But then you would have had a bad weekend, right? So learn to consider making your move after all the FOMO's died down. But remember, most of Main Retail Street is going to be thinking at that time. They're going to be thinking, I remember Friday, I was shorting all day and I got roasted. I ain't touching a short today. Right? So us guys who've been doing this for a long time, we always say, don't short the trend. Don't short the intraday trend, right? And it depends on where we are, but don't step in front of the steamroller, right? How many of you people have, you get short, you move your stop up, you add to your position. Like, oh, this thing's straight up. It's got to pull back. It pulls back, but it pulls back 4 points. And then it goes sideways, it distributes, and then it breaks out again. And you stop out on the false breakout after you've added way too big. And now your trend day loser is the biggest losing day of the week for you. Rather than just taking your, okay, you want to short the trend? Fine. If you're going to short a trend day, do it on tiny size. That's my advice. And take your stop every single time. That way your trend day is not your biggest losing day. Now, why do I talk about this like I actually know what I'm talking about? Because I've done it. I've been the moron that does what a lot of you guys do. Mean reversion. That's the only flavor that a lot of people have. Mean reversion. I'm going to go against the trend. So, what are we talking about here? We're not talking about going against a trend. We're talking about the next day, the following weekend, when you're into daily resistance, when all the FOMO has subsided and there's been events that occur over the weekend, right? And bigger money's going, we've taken sentiment polls and everybody's bullish now. Retail Street is 60% bulls and we're still in a downtrend. Guess what, guys? We could shake these people out for another swing trade. Easy peasy. All right, some of the smarter big money that are very able to move markets short term, but that aren't such big pension funds that they can't get in and out of the market without tanking the whole market, right? Because not a lot of these institutions are not great, but I'm not talking about that money. I'm talking about very large traders that can move markets that are very intelligent money for shorter term trends. So this is the time frame I'm talking about. I'm talking about when to do it and on what day you decide to do it, right? Not right into the FOMO where they're just rolling, they're just allowing people to continue buying and they're not really trying to push price down. Why? Because you're all buying burgers for 25 bucks and it's not Wagyu. Of course the vendor wants to sell all the burgers they can for 25, 30. They're not going to slow it down. They're not going to come down and say like, I'm offering 500 Wagyu burgers. I'm still very profitable at $12 for this burger because it's a mixture of Wagyu and something else. You guys don't know that. They're not going to go dump the market with 500 burgers at $11 even though they're still profitable. They're like, suckers. Come buy the $30 Wagyu burger. Come on, I'm going to just trickle it out. I got lots to sell. Infinite futures, billions of dollars to sell. Come get it at the top. And then when it gets, the FOMO gets even more intense and a bunch of people all want to pile in at the top, whoosh, here's all our burgers. You're all stuck. Whoosh, start selling it lower. Oh, this is the pullback. I'll add to my position. Meanwhile, there's a volume node over your head. Uh-oh. Oh, shoot, we're heading singles. This is where I add. We're hitting singles. This is where I add to my position. Right? Meanwhile, you're not paying attention to the 135. You're already in a wave 5, Elliott wave. It's already parabolic. It's pulling back. You're buying the 38.2% retracement. Whoosh, it keeps going down. Ah, fuck. What's going on? And then whoosh, keeps going. 50% retracement. Gotta load up the boat at 50%. There's a volume node right below me. Gotta add big here or I'm gonna miss the move. And then it keeps going. You don't realize you're in an ABC correction. ABC corrections often shake out retail way below 618 retracement of the whole move. And you're adding. Then we get the B wave of the A, B, C. A is primary wave down. B is secondary wave up. Oh, I'm saved. I'm saved. And then whoosh, they absorb it. Lower high on volume. Sell it. Nothing like pure delta, baby. They sell it again, make a lower low. You're all getting washed out. You are all getting washed out. And this is how they do it. Because in the moment, the hard right edge, when price is moving, your recency bias is going to say, buy the dip, buy the dip, buy the dip. And you know what they're going to do? They're going to close it on or near middle of the range, near the lows, at like 70 to 80% of the retracement. And everyone's going to be like, market didn't close on the highs, it's weak. Come on now. Really? Again? So you see, do you think like the retail MGI, I'm following the herd, or do you think like the big money who needs to get out into the popular opinion about how markets should move, how they're taught by the majority? So what are you doing? Are you always chasing the tail? Or are you wagging the tail and understanding how they wag the tail and you chase? So that's what I'm trying to it's what I'm trying to convey. Anyway, I don't review bonds, Adrian, but I trade them. I trade them. They're down there, but not a lot. I don't consider myself a good bond trader or a full-time bond trader. I'm only trading like extremes or whatever. But Ticino, I think trades bonds, and he has a bunch of chart books. Um, he does equity swing trading, if I've read his profile in various places correctly. And then he's a day trade bond trader. So a lot of his charts that he sells are geared towards bond traders. And I'm not educated enough to talk about how to use his charts, but I'm sure they're very good because I've looked at them a little bit and I can tell they're a little bit different and they're set up a little bit different, and they seem to make sense based on the way bonds move and the volume that moves in the bonds. So I don't know, you might look into some of his stuff. Just reading comments. Oh, cool, Chirp Tone. Mental Game of Trading. Yeah, it's such a good book. Or you're listening to, but yeah, it's a great book. I submitted my heads up display to Chino, and that's it. Not all my chart books. No. No, I mean, you can build all these chart books that I have up here by just watching my YouTube channel. So I'd be like undermining my own YouTube channel if I just started handing out chart books. And then nobody would understand how to build them. And I have nothing but questions nonstop. So you'd have a bunch of dummies opening up chart books. What the heck does this do? Right? Make more work for myself, and nobody would watch the YouTube stuff. So I'd rather teach you guys how to fish rather than saying, here's a pile of fish. You don't know how to clean them. You don't know how to cook them. But here's the fish. So, yeah. So 2008 Gucky. That's I don't sell chart books. But, you know, if you're like if you're really looking to get some chart books, Ticino Trader is like $6 or $7 a month or $8 a month, and you get all of his chart books that he's built. So you can't go wrong with that. I mean, $8 is a few coffees. So invest in that, and it'll save you a bunch of time. And if you're like the kind of person that likes to reverse engineer, then you can just, you know, get subscribed to his chart books, get his level 1, and then deconstruct them, right? Go into the settings and go like, oh, why does he use that, and what's that for? Just deconstruct them. Some people find that a little more useful, but and then otherwise, if you want to learn how to build from the ground up, watch my YouTube videos. I show you how to build them all. So that, I think, for a lot of people, is one of the better ways to go. But, you know, hey, to each their own. Oh, okay. Yeah, I've got them all here. Like even the TPOs that you see up here, the footprint chart here. Let me see. Footprints. Here we go. So there you go. Right? Footprint chart. So this one's cool. This one is useful. Now this doesn't look useful because this footprint is set to compare volume profiles to all visible profiles, and I do that for a very good reason. So if we get rid of the close here, which is this orange here, everything will start popping. You see that? Still forgetting to do that. Look, you see how it all pops with the volume now, right? See these volume nodes? And then when we break a range, hardly any volume, then they distribute out here. See that? Do you guys remember on Friday I was shorting, looking to fill in this volume near the close? Why? Low volume, right? Get below here, the longs will likely spit. It never happened. So I recognized it and covered. Now I was shorting a little higher. I covered for some shekels. But I was looking for that, right? So there. Golly, my little girl is screaming. Holy cow. Sometimes she just sounds like we're abusing her or something. She's just like, my wife's probably cooking, and she's now in the bassinet, and she needs sleep. It's nap time. She's just going apeshit. If you guys have kids, you can identify, but if you don't have kids, you have no freaking clue what I'm talking about. She's going bonkers. I swear the neighbors are going to be calling CPS, Child Protective Service. These people are torturing their 3.5-year-old. They have to be. Her cries are like you're pricking her with the needle, all because mama's not picking her up. She's an angel compared to the first one. The little boy was, even if you picked him up, if you didn't pick him up right, he was still going crazy. This little girl, she's consolable. If you pick her up, just look at her. She looks back at her beautiful baby little blue eyes, and she'll smile, even if she's having a rough time. So she's consolable, which as a parent, that's enough. So anyway, I could talk about my kids forever. It's hard to be little, I know. I use internal candles inside the footprints. Yeah, I mean, so these candles are volume candles, meaning the more volume is inside, the wider the candle. You see this one? Here. This one compared to this one, right? So this volume is very high on this whole bar. They're both 5-minute bars. But this one just holds a ton of volume. So it's just another little indicator. And then down here, right, in this number bar calculated study, right, you can tell right here that this would have been in real time orange. Now it's not orange because the look back is for the whole session. And after the close, everything else pales on the 5-minute. So that's what's affecting this not being orange. But in real time, because the setting is different for the number bar calculated studies than it is for the footprint. The footprint, for the shading, is it for the study? No. Well, okay. Nope, I'm going to correct myself. The coloring is for the whole session, and there's no way to change that to relative to visible. So in other words, I would like this to be orange relative to what's visible on the screen, but there is no setting for that. The profile width itself is relative to what's visible, but the coloring itself is relative always to the whole session. So that's where you have to kind of know the Sierra chart settings and why you don't see orange here, right? Because I would like this to be lit up orange based on only viewing it, not for the whole session, but viewing what's visible on the screen. Then I could come here and scrunch this up and look at the whole rotations for the session, right? So like right now, all of this is the coloring. Here, we'll see if we can move this. Scrunch this up here, right? You'll see. Can't even see the orange up here, but we'll see it right now. All right, so there you go, right? You see the orange? Here, let's get the hand tool on. Link. There you go. Right? See how none of this is orange? That's because in time, the close is included for the coloring. And so everything relative to the close now doesn't have that orange. See that? Here's the close, right? So there's some, now in real time, this would have been bright orange. So you would have known in real time that this bar right here, this one and this one, so this one was increasing. Not only was it increasing in average volume per second. Like this is 38, this is 61, this is 101.13 contracts per second average for the whole 5-minute bar. So you notice this in real time, and you guys saw if you go look at the live stream, you would have seen that this was all orange in real time. So you gotta, just based on the orange, you would already be like, potential reversal in the market here. You're like, whoa, that's cool. Yeah, it really does work well. That's why I have it set up like this. Anyway, I show you guys how to build this footprint chart. So you could kind of use, again, I never really suggest, yes, I used to trade just with candlesticks, Adrian. Price action trader. That's why when I'm trading throughout the day, I'm constantly referring to the price action traders, because I know where they get trapped. I know how I was taught. Right? I studied Nissan, I studied Al Brooks, a bunch of others, Baby Pips. Like, I remember from way back, all these books that I originally read were all about price action, right? Morning Star, Evening Star, right? Bullish Haramis, all this stuff, engulfing, hanging man. It just goes on and on and on. So you start to see where they punish a lot of these traders in the E-mini, and then once in a while these patterns work out. But as a scalper, mostly they just punish these people. So anyway, that's why I'm talking about trap traders and candlesticks and all that stuff all the time. So anyway, well, let's go fix this footprint real quick. Widen it out a little. There you go, right there. Get rid of some of these things here. Let's see, what else did we put right there, right there? Do we have any more? I think that's it. There we go. About there, right? About there. For volatility, that's good enough. So anyway, E-mini. Got a lot of these levels in. Not done with my analysis, but I shared enough today that you guys, I've got some downside levels I'm going to chart, but I shared enough today to where you guys got to see something different with how I perform weekend analysis. And to be honest, I want to get this NASDAQ and E-mini done in 20 minutes. And then I want to just go spend time with my family. And then the market's open in 40 minutes. So I'll watch that. So anyway, have a great weekend, guys. Thanks for tuning in. Like, share, subscribe. That's how YouTube works. If you're not doing that, then people aren't going to find my videos. If they're not finding my videos, then why do I do this? So I do appreciate you guys tuning in and talking to me and all that other good stuff. So have a great, great, great weekend.